my dance, make it hurt.
Good day, everyone. On this rainy Wednesday, welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. I am your hopeful host, Dominic Green, managing partner, Tenneco Commercial Real Estate Services here in the DFW area. And today's Educational Wednesdays, I want to talk about, well, like I said before, on last Wednesday, I was going to kind of do a little quick deep dive into other subsectors in the office. Want to today talk about flex space and why I think flex space is has a lot of opportunity in it, and especially for us, depending on where you are in your capital formation and network and all that, could be a great alternative to invest in, to start with, or depending on where you're at in that journey. If you have more capital, you can go larger. But nonetheless, flex space it's basically almost an industrial sized building in some instances, but it's a office building that is mostly, or split, I would say, on a ratio about 70-30, 60-40 office, and then the back part is kind of like an open warehouse structure with a grade level. In most cases, roll-up doors. Sometimes people have taken these industrial buildings that have these roll-up doors and just turn it into windows, right? But what flex space is exactly what the name suggests. It's a flexible space. So you can have office, you can have lab space. I've seen people turn flex space into retail space. It just provides a lot of opportunity for different types of businesses to come into, right? Now, typically what you find in a lot of your flex spaces is kind of your small to mid-sized businesses. It's operated in a sense almost like, I would say, multifamily, in a sense where you have property management, instead of you just have businesses, right, as opposed to individual people. The good part about it is, for those who own or invest in industrial buildings, like warehouses and distribution centers, your operating expenses is a lot lower, right? And what I mean by that, so in a traditional office, let's say a Class B, Class A building, your operating expenses is anywhere from an office, say it's Class B, well, probably Class C, about $7 per square foot. When you start getting into your Class A and, downtown type buildings, the operating expenses jump to, $11 to $15 per square foot. And sometimes it's passed on as triple net, sometimes it's not. Sometimes it's full service. You kind of have a situation where with flex space, you don't have all the additional operating systems, I would say, because the common areas is pretty much minimal: parking, lighting, and then whatever in between. If maybe there's a courtyard, maybe there's not. Most cases, but really it's just the parking lot, the exterior of the building, landscaping, and maybe some landscaping, right? It's very minimal. And then obviously you have your insurance and stuff like that, right? And your cam charges, so, and taxes. So it's a little bit minimal. So, Whereas your office buildings are about $7 all the way to maybe 15, and in some cases, like if you're in downtown Austin in an office building, man, I've seen operating expenses at $20-$25 plus the rent. So you're anywhere from $30 per square foot in a base rent, plus another $20-$25 in operating expenses. So you're already $55 in. So just on 1,000 square feet, I mean, that's 55 grand off bat, right? And that's just 1,000 square feet. In comparison, when you're looking at flex space, your base rent is probably anywhere from $8 to $10 maybe. It just depends on how old the building is and what market it's in. But your operating expenses is doubled, and worst case scenario, $7. Best case scenario, about $4 per square foot, right? So typically, flex space is a little bit more affordable. So you have a lot of businesses that, for starters, will gravitate towards flex space to start out with as they grow. So you'll see a lot of your HVAC companies, your plumbers, your suppliers, your construction guys, engineering guys, a lot of your tech startups, all your lab people who want to do R&D will be in those spaces. So you get a very diverse group, but you can also kind of narrow it down too as well, the type of tenants to have in there. Now, oftentimes you have, like I said, probably a little bit more turnover with flex space, because typically you'll see leases from a year to 5 years. In office space, you'll have typical, maybe 3, but upwards of 10 or something in between of lease term in there. So you could have potentially a little bit more turnover in your flex space. But then also you do have, investment grade corporations and stuff like that will occupy flex space as well. So, some of your large tech will be in flex space. They're headquartered in flex space, and they're willing to commit, because sometimes they'll do just a single tenant in that space, and they'll commit, to 10 years, long term in that space, because in general, compared to if they was in the office space, they would be paying probably double, triple compared to the flex space. And then a lot of your flex spaces have, their ground level, maybe some are 2 stories with a mezzanine, but the floor plate is very wide open. It's not a lot of columns in between as you would have with your office buildings, because obviously the support of the amount of weight and things like that you gotta have on there. And then, like I said, your turnover cost really just boils down to, because essentially it's almost like a warehouse in a sense, right? But really, it can boil down to just paint, carpet, and exterior, and then maybe tearing down some office walls in there. Sometimes there's not that many to begin with, so maybe you have to build it out. It just depends. Like I said, you'll see flex spaces that have 100% office build out, which adds up. But then you'll see some that has anywhere from 10 to 30% office build out, and then, like I said, the rest of it is just warehouse space. So businesses and office and administrations in the front, and then they're doing operations in the back, right? Or it's just wide open, and they're using more of an open floor plan in there. So, I think flex space provides a lot of opportunity. You don't see a lot of it, in a sense, being built as much as you see probably office and obviously retail. I mean, there's retail being built, everywhere, especially if you go into the higher income areas. I mean, anywhere they can grab some land and throw up a building and have retail in it, they're doing it, right? But that's another topic. We'll talk about that later. But from a flex space standpoint, your operating expenses are lower. You have a diverse group. You can really, go in and change, cosmetically. You can do, some spec build in there. Because, oftentimes, and like I said before with Office, you do have a A lot of companies are kind of looking for plug and play, right? They really don't want to wait too long for a build out. They really just want to come in, see what the setup is, work with it, and begin to pay rent. And then you keep it going, right? So you do have to have management. Like I said, you do have some type of management because you have a lot of tenants in there, and typically, just depending on how big it is. Unless it's like a single tenant, then it's only really one tenant, or maybe it's two tenants in there. So it just really depends on the building that you're looking at. A lot of your flex spaces are typically near industrial areas. Some are within the community. And then the ones that you see kind of built out, or in a sense that they're trying to build them as I've seen them convert some of these flex buildings into commercial lofts. So the front part of it is pretty much warehouse, and the back part is kind of like a living/office corridor with a mezzanine. And all mezzanine means there's a second partial floor. It's not fully extended in a sense, but it's the second floor that overlooks into the first floor. So there's a lot of versatility in it. One of the largest owners of flex space is, for those who want to dig deeper into it, is PB Business Partners. They're publicly traded, so you can kind of look at their information. You can get an even more in-depth understanding from what I'm telling you right now of what they structure. And then what you've had recently is kind of the transformation of where they're doing, well, before the pandemic was creative industrial. So they were using those spaces, and they was putting Class A finishes throughout, making it look real nice. You had T-Mobiles in there as they were putting some of their their engineering teams in there. You had banks going in there, putting their operations in there, because it's just lower for them. It's all about, when I talked about earlier, real estate is nothing without the people, right? So the same thing for commercial real estate is nothing without the business. It's there to serve the business. So from a business standpoint, I can technically give more space, have a little bit more flexibility on how to use the space, and then overall I have a lower operating cost, right? Because why? One, real estate is the number two, as I said before, the number two largest expense of a business. Number one is obviously labor, right? And I think that given where, price, supply, and demand, and again, also depends on what market you're in as well. Like out in California, a lot of your flex buildings are built closer to the coast, near ports and stuff like that. In Dallas here, it's kind of spread out, but you see majority of it close by the airport, which makes sense. Easy to get to as far as back and forth to the airport. If you're bringing in material, having it shipped, you could have it shipped. The turnaround time is a lot quicker. So you'll see flex space in those areas. Then you see this, in the suburban areas as well. There's flex space in Frisco that's owned by KBS, and they have a lot of some of your tech and software companies in there. And again, it's a one-story building, a lot of open space, creative use to it, and they've turned it into mostly office, with a more flexible open layout. But anyways, so typically, from an acquisition standpoint, these buildings are probably on the low end. I've seen the smallest flex space maybe 20,000 square feet. I know here recently, a company just bought flex space out there in Irving, near Las Colinas. It was about, I want to say 70,000 square feet. And I estimate they probably paid about $7 million for it. right? But they have, I want to say maybe about 5 tenants in there. They're quality tenants, engineering, construction, and then there's a supplier in there, if I remember correctly. So, these companies do business in a sector that's growing. It's not dying, because you always got to underwrite. Also, the real estate, how many uses, what's the highest and best use, what can it be used for later on, not just relying on that one particular type of tenant, and what type of tenant is actually in there. Because remember, the real estate is how durable you can generate the income. The tenant is how secure the income is over a short period of time, right, that you have it. And like I said, FlexSpace just allows flexibility, so you can convert it, change it to anything, pretty much. Obviously, check the zoning. Some cities are stricter than others. Here in Texas, we're pretty much business friendly, landlord friendly. But with that being said, the acquisition prices, in my opinion, for those whose network of capital may not be as large initially, I think it's within the realm, anywhere from probably $1 million to, like I said, $8 million. And then, you're dealing with businesses, not individuals. They're still having a little bit longer term lease than you would have a multifamily, where it's pretty much 1 year, 13 months, 6 months. Typically these businesses, like I said, they may do a year. Probably the average, I would say, is probably 3 years they're in there. And then they'll renew or stay or whatever the case may be. And it just depends on, where you're located, how attractive the building is, so forth and so on, the surrounding amenities. And then there's another company, I want to say, I'm trying to think of the name of it. It's actually 2 of them. That's all they do is acquire FlexSpace industrial buildings, Class B, Class C. And if you really look at it, like I said, they're going in, upgrading the build out a little bit, doing a lot of exterior painting, changing the name, changing the branding, and leasing the space up. And, they're maintaining. And then one thing we know that just from, in general, that there's more small and mid-sized businesses than there are large companies, right? So the pool of opportunity for leasing is still large. And I think from, in comparison, I think it's, it's kind of like the multifamily of industrial or office, I would say. Which, multifamily is on a tear. You still have to get commercial lending. It won't be the same as if you're getting, Freddie and Fannie agency debt. But nonetheless, it does present an opportunity to acquire commercial property, have minimal operating cost, which, equates to lower capital expenditures. So I think in essence, it's a great opportunity. Back up, man. So yeah, that's just a little bit about FlexSpace. Kind of a quick intro. I think I'll kind of dig a little bit deeper into it probably later on through this journey that we're having as we're coming together and having discussions about commercial real estate investing, and sharing the knowledge. Because like I always said before, this is a journey. There's no end point in the destination. You're always learning. Things are always changing. What's happening before doesn't happen now. So now it's just about figuring out through the noise, where's the opportunity. And I think, the FlexSpace buildings, the Flex Industrial, Flex Office is one of those opportunities. So, with all that being said, Thank you guys for tuning in. Let's keep the discussion going. Like, share, subscribe, comment. Let's continue this conversation. Because, together we all have experience and knowledge in different industries that present opportunities for us to leverage commercial real estate because of that. Especially, also when I talked about the flexibility of flex space. One of the things that is starting to, I want to say shine bright is life sciences. So, kind of the R&D, what I was talking about earlier, lab space. And so flex space could be a great beneficiary of that. The way they did the vaccine here, how quickly they were able to, basically do the research and do the trials, and pretty much within a year they had a vaccine made. So I just think that just presents opportunity for for us to kind of get a first mover's advantage in some cases, in some areas. But you got to do your research. You got to do your due diligence. Because when you're dealing with biotech companies and stuff like that, life science companies, it's a whole different requirement. Especially if you got to have lab space in there. The plumbing is different. The plumbing requirements are different. The ceiling height requirements are different, which typically is not a problem. It is for people that own office buildings, because the ceiling heights are, maybe 9-10 feet high. And you're going to need at least at a minimum 12 when you're dealing with life sciences. And that's because they got to have all the plumbing and the duct for their lab equipment and exhaust and stuff like that, and overhead stuff. So it's a different requirement. And when you deal with flex space, because it's kind of similar to like an industrial building, you'll have clearing heights, at a minimum 12 to 14 feet. Some of them be lower, some will be 10, some will be 9. Just depends on how old the building is, when it was built, 60s, 50s, who knows, depending on your market. But a lot of the newer stuff that you do see, or semi-newer, have higher clearing heights. 12 to 14 to 18. And then also, and just the last thing I wanted to note, when I talk about when you're committing to investing in commercial real estate, always reading the news, picking up on things, just to be curious, right? So one of the things that you'll have going now is, or one of the companies that I was paying attention to from tech, is it's called Fabrics. I think they recently just raised some more money. So what Fabrics does is they create micro fulfillment centers, right? Their whole thing is we could take up less space, 4,000, 6,000 square feet, and help the businesses that need to do fulfillment, e-commerce, right? And just leveraging their technology, leveraging the machinery that they use to fulfill orders and to get to the customers quicker, because now they can be entrenched into more neighborhoods because their space requirement is less. Because, obviously Amazon, the amount of space that they're leasing is millions of square feet, right, for their large centers. I think on the low end, the smallest I've seen them lease is maybe 200,000 square feet, right? And then some of your 3PLs, or your third-party logistics companies, as for the acronym, they're probably about 100, maybe 50,000. So their whole concept is hey, we can get into more spaces, be closer to the customer, and create a network effect to where we have little small micro fulfillment centers all around the community to allow you to get the flexibility of fulfilling orders quicker and more efficient. And then also the reverse part of it, because with e-commerce, the big industry of that as well is reverse logistics. And that's just because people, you ship something to them and then they end up returning. Well, it's got to go somewhere and some through some type of process, right? So that's a big part. So there lies the opportunity again when we're talking about flex space, flex office space buildings, where they're kind of more around neighborhoods. They don't take up as much space. Like I said, typically they're about 20, maybe upwards to 80,000 square feet. But it presents the opportunity for you to take advantage of that trend, because we all know e-commerce is not going anywhere. But it allows you to play in that, and if this picks up steam for the micro fulfillment, I mean, you got a tenant in there for a very, very long time. So that what that means is, again, you already got low operating costs. You got a stable tenant in there, which means at the end of the day, you got a longer runway for cash flow, because that's what we invest for. At least that's what I invest for. I invest for cash flow. Others invest for appreciation. If we get appreciation, that's a bonus. But at the end of the day, I'm looking to put the cash in my pocket, so it allows me to do other things. Typically, go buy more property. That's the goal. So I know I rambled on a little bit, but again, thanks for tuning in. Let's keep the conversation going, Black people. Because like I said, I always say at the end, we can go at it alone and get there faster, but we can go further if we come together, right? Or go together. So this is a space, this is a platform, I guess. This is the conversations I want to have for us to come together, work collectively, leverage our knowledge base, leverage our experience, our resources, and leverage the power of group economics, because everybody else is practicing. Black group economics, I think is where we should be trending towards, because we have power within ourselves, and we can rely on ourselves. We did it before, we can do it again. So I think collectively working together, helping each other, providing information, communicating, and just sharing knowledge, and then leveraging up to reach our common goals. For me, it's economic empowerment, generational wealth, and I just believe that we can do it with commercial real estate. And then that's the foundation, and then that just leads for us to do other things, invest in other businesses, franchises, stocks, you name it. So enjoy your Wednesday, good people. Thanks for tuning in. Like, share, subscribe, comment, and let's keep it going. Happy investing, everyone. Until next Wednesday, let's keep talking commercial real estate. Black people. I'm out.
Beats by Dallas, make it hurt.